Equinor's profits jumps the most in more than 4 years, beating the analyst estimates as the company, formerly known as Statoil, reaped the benefits of higher oil and gas prices. The Norwegian producer's performance offers a glimpse of what's to come for the third quarter earnings for the world's largest oil companies, as the industry enjoys a perfect combination of high prices and low costs. A perfect scenario. Joining us on the phone from Oslo for his first interview of the day, it is Eldar Saetre, the CEO of Equinor. Eldar, always great to get you speaking to Nera and I. Well done on the numbers. That's a lovely sort of top line, the best profit jump in more than 4 years. What I want to know from you, does this take me closer to a share buyback in the first quarter of 2019? When will you deliver that tantalizing thing the market wants?
So first of all, I really appreciate, I'm very glad that we can deliver these strong results and on the back of that also a very strong cash flow. And then we continue to take good care of our cash and we give sort of priority to value-enhancing projects. We have a very strong project portfolio ahead of us. Then we would also like to see strengthening of our balance sheet. That's also a priority. And then we have indicated that share buyback is, the scope for that is emerging, but it would have to be included among, many other considerations as well.
Okay, so the scope for share buybacks is increasing, Eldar. Good morning, it's Nera in London. But you also reduced your Good morning. You also reduced your planned investments in 2018. So what are you prioritizing? Shareholder returns, investments, both?
Well, in order to provide shareholder returns, you need to invest, you need projects. That's the nature of our industry, right? So this is a balancing act. And you're very right. We reduce our capital expenditures for this year from 11 to around 12 billion. It's basically due to a very successful project execution across our portfolio, and that is what has given us the basis to reduce this CapEx guidance.
Eldar, I'm going to push you a little bit more. It's not often. You did your very first interview with me, so I'll have a go. When is this buyback coming? Q1, Q2, Q3? The market, you hinted to the market that it was very near term. Let's tighten up the guidance.
So I think you're getting a very precise guidance, and there's no individual triggers that could lead to anything like that. It's complex environment. We need to look at the investment opportunities, the strength of our balance sheet, the commodity environment. All these factors goes into these considerations. So there's no triggers or no specific guidance related to any particular triggers.
All right, Eldar, we'll do the two-pronged pushing here. The buybacks from Manas. I'm going to push you on investments. What more can you tell the markets in terms of investments?
So basically, we have indicated 11 billion earlier for this year in total capital expenditures, 1.5 billion in terms of exploration. So we maintain the exploration guidance of 1.5. Our project execution is made a record high portfolio of projects that we are taking through the pipeline and executing, and we do our review of this portfolio twice a year, bottom up, and what comes up also this review is an even stronger portfolio from a project execution perspective, and this has given us the confidence that our guiding should be taken down this quarter. So that is basically what is behind it. And I would add also obviously a consistently very strong capital discipline across our whole business.
Well, that's going to be music, hopefully, to the market's ears, because that's the one thing that they sort of seem to doubt. Eldar, we've talked to you about your Norway focus, about your Brazil focus and your renewables. Where is it going to be for Eldar Saetre as you go into the next tenure at Equinor? Where are you going to build? Are you going to look beyond borders of Norway for the next leg of growth?
So obviously the Norwegian continental shelf is a mature province. It's our home turf. We still have ambitions to maintain the current level of production on the Norwegian continental shelf for a long time. But we will also have to build resources, oil and gas resources outside of Norway. And I think we've done that quite successfully so far. We have the strongest resource outside of Norway now than we have ever had. We have a strong cash flow, $30 per barrel, which is even higher than we've seen on the Norwegian continental shelf. So we will continue to build the international oil and gas portfolio. Main focus is Brazil now, United States. And on top of that, our renewables portfolio will also continue to grow. In fact, even more than we have seen than we see within oil and gas, but from a very much lower base, of course. So we'll continue to look for value-enhancing opportunities also within renewables.
Eldar, are we going to see $100 oil?
You know, if you say, I think there is a lot of uncertainty on the oil price. I see a market now that is more balanced. We see stocks are more balanced, and we will still see capacity coming into the market from projects that were, sanctioned prior to the downturn. Then at some point we might start to see the impacts of sort of the low investment level that we have seen over the last couple of years. And then obviously sort of other sources and also the demand side is going to decide this. But I don't exclude that we might continue to see a heated market. But more than anything, I would expect continued volatility in this market environment.
Eldar, before we let you go, look, the world's dealing with a rout in the equity markets. It's dealing with China-US. It's dealing with trade wars and geopolitics in my region of the world, down here in the GCC. What is it that perhaps is the biggest risk for you as you look into 2019? Is it trade and the impact that could have on demand?
I think, trade, and free trade, is a good thing. Energy is so important for people across this planet, and it has to move in various ways across, geographies, and also supplies that goes into the industry. It depends on really a global, as free as possible trade. So that is something that is good for mankind. It's good for energy and the cost of energy, which so many people depend on. So that is,
okay.
I think my strongest advice. Yeah.